all right. We are back on the stream. Oh man, I forgot my Santa Claus hat. I gotta go get my Santa Claus hat. Maybe I shouldn't get. I gotta get the Santa Claus hat. All right, hold on. Let's put this baby on because Sir Jerome Powell just said that Christmas is coming early, and I haven't looked at the markets in the last 30 minutes, so I hope Christmas is still here. But things are looking pretty good. What is going on, everyone? Thank you, everyone, for joining in the stream. We got quite a show as usual for you all today. We have, of course, the Oracle and the Adobe earnings. I am very bullish on Adobe coming into earnings. I do have a position in Adobe coming to earnings with a small options position, not that big. But I do think the risk reward is on the upside. Oracle, I do not have a position on this company coming into earnings. I honestly don't even know what's going to happen to Oracle coming to earnings. I think the setup was last earnings quarter, but not this particular one, but we'll see. I mean, who knows? Maybe Oracle or Larry Ellison's going to come back and surprise the markets with whatever he has to offer. How is it doing? I might be lagging a little bit. Did you guys like that intro beat that I had over there? I really enjoyed it. Actually, I'm going to play that for a minute right now while people are still pulling in here. What is going on? Hold on. Where is that? Where is that audio clip I had? Man, that beat was pretty good. Where was it? Here it is. I'm going to play this for a minute. Give me 2 seconds here. All right. So, had to collect myself for a little bit here. Let's take a look at the US stock market and see what is going on over here. Let me just pull up the screen real quick. All right. So, I mean, things are doing pretty good still. We're still pretty up there. It looks like the S&P 500 is actually set to close at an all-time high today. Not an intraday all-time high, but an all-time closing high today. Actually, it's right on the all-time highs. That would really be crazy if we didn't close, because the all-time high is actually at 6890.6. Actually, 6890.88 is the all-time high in the S&P 500. If we can close above that, that would actually be a pretty cool setup coming into the Oracle earnings. Let's just hope Larry Ellison doesn't dump on the markets today. If he actually does dump on the markets today, that would not be that favorable to a lot of people. What is going on? Samarth, how are you? Appreciate you for tuning in for a lot of these streams, actually, and also in Chris's Discord. Really appreciate that, guys. We have 7 people here on the Wolf Financial YouTube. We have 5 people on my channel. I would really recommend people join the or subscribe to the Wolf Financial YouTube, which is where I'm streaming this concurrently with my channel. But starting in 2026, I'm only going to be streaming it on the Wolf Financial YouTube because they were so gracious to offer me a full show that I'm going to be streaming 4 days a week to you guys. Usually going to be going for around the middle of the day, but today, of course, we have the Oracle earnings, we have the Adobe earnings, and I really do want to amplify that earnings because I do think Adobe is a pretty good buy today for myself. Obviously, not financial advice. I could only tell you guys what I am doing with my portfolio, and I am long Adobe. I actually went over, or I sent. I posted on X a chart that Adobe is actually trading at pretty much the cheapest valuation it's had in the last 10 years, or very close to the cheapest valuation it had in the last 10 years. Let me actually pull up that post real quick right before we get into these earnings here. Yeah, I'm also going to go over some stuff from the Fed. Obviously, we had a very interesting FOMC today. I missed Jerome Powell's speech that it had during the meeting, but it was definitely an interesting one. At least the market liked it for sure. But we have over here, Adobe is pretty much trading at a price to free cash flow on a trailing basis of 15. I believe that's price to free cash. Yeah, that's price to free cash flow of 15. Trailing PE is at 21. And yeah, we're coming in today with Adobe at Yeah, it's about flat today coming to earnings. I kind of like this setup here and the technicals. It's closing here right on the 100-day. The market makers are literally pinning this stock right at the 100-day moving average for Adobe. I mean, really, we'll see. We'll see what's going to happen today because it's possible that I don't know, they might come out with numbers that aren't as bad as the market expected or actually pretty good, and the market is going to truly benefit them for that. Or the market's going to dump them anyway. I mean, we'll see. It really is difficult to guess exactly how a market is going to react to earnings, whether they're good or bad. But in this case, I think the risk reward upside is in our favor here. I think the risk reward is asymmetric. I think the company's trading very cheap at its cheapest valuation in the last 10 years. And on top of that, the company is buying back a lot of their stock. If you look at the shares, if you look at the total shares diluted over the last 10 years, it's just been going down because they're buying back their stock. They're producing and returning a lot of cash flow to investors. I don't know. The valuation doesn't really make sense to me. So I am long that thing coming into earnings. What are we looking like here at heading into the close in the S&P 500? Yep. I mean, we're just shy of the all-time highs, but this is a very bullish candle. Today actually is very interesting because we retested the nine EMA or the exponential moving average, which we've been pretty far extended for quite some time, but coming back here to retest that one this morning, that bouncing off that is definitely a good sign for the broad markets. When we hit the all-time highs prior, we were actually very far extended. So considering that we're not nearly as extended for the 9 EMA, I mean, we've basically been using it as support since the April lows, and it's looking very favorable for the bulls today. We're above all the moving averages, above all the exponential moving averages. But I think Oracle is really something to look at today because, I mean, well, the chart isn't so great. Of course, they're trading above the 9 EMA, but there's going to be a lot of that commentary and also that backlog number. Is the market going to be favorable as far as what their backlog is? And like I mentioned before, it's kind of a lose-lose situation here because if their backlog comes up higher, is the market going to believe them? But if it comes up lower, is the market going to be like, see, I told you? So it's like, I don't know. I don't know what's going to happen to Oracle earnings, but it'll be very interesting to see. It's also really interesting to see that the market is up about 1% today. No, actually about 66 basis points today. And NVIDIA is still red. I wouldn't really expect that to happen, but I mean, the market does what it does. It always makes its crazy moves left and right, up and down. Who knows? But PayPal's green in the day, so congratulations to PayPal shareholders. That is when you know the market is quite bullish today. And I'm also going to cover a little bit on Photronics. Photronics is up about 45% today, so shout out to Stock Talk Weekly again for calling this one out. I did have a position in this one coming into today, but I'm taking no credit for landing that position in the first place. I take credit for hitting the buy button, but certainly was an idea that I picked up off of Stock Talk Weekly. So congratulations to him. Congratulations to anyone that is in PLAB or was in PLAB coming in today. Shout out to Amcor as well, continuing to hit new all-time highs every single day. I thought On Semiconductor was going to be good today, but On Semiconductor actually looks like it's setting up for a little bit of bull flag here, but Zeta actually almost hit $20 today, which would be really nice. But, you can't really win them all. The market's not always going to pitch you a straight fastball every single time. And usually what's going to happen. So, all right, so we are going to close here in about 10 seconds. We are not going to be at an all-time high. Unfortunately, I thought we would be at an all-time high. I might have to actually change the thumbnail for the video because I thought we were going to close at an all-time high. It looked like it, but it isn't necessarily going to happen because the market is now closed and we closed just short of the all-time highs. But we do have Adobe reporting earnings today. We also have Oracle, like I mentioned. We have Synopsys. Let me actually bring this up over here. I'm going to clear this real quick. I like to have my little earnings radar over here. So we got Oracle, we have Adobe, we have Synopsys. We also have Planet Labs, if anyone is interested in that one or anyone has shares in that. And let's see here. Let me pull up my earnings hub and see what else that we have here on deck for after close. I mean, not really much. We got Oracle, Adobe, Synopsys, Nordsun, never heard of that one. Vail or MTN, never heard of that one either. But Planet Labs, a lot of people are obviously in that one, and a few other names. But definitely the ones that everyone's going to be looking at is going to be these four, but especially Oracle and also Adobe. Maybe some people are looking at Adobe here. So We are here at the market close. We're waiting for these earnings to come out. NVIDIA closed the day just about down less than 1%. So I really wouldn't argue that as being like too down or anything. I actually want to pull up some other stocks here that I want to take a look at after hours here. And we're just waiting for the print. So Oracle is supposed to report roughly in 5 minutes, so at 4:05 p.m. I'm in Pacific time zone, so it's about 1 o'clock over here. Adobe also at 1:05, 4:05. Planet Labs is also at 1:05. Yeah, they're all gonna report around 1:05. So we still got a little bit of time left. Planet Labs is up about 2% after hours, which would put it right above the 50-day moving average. Would be a pretty crazy setup coming into the earnings if they didn't already print their numbers out there. Let's actually take a look over here and see if they already printed their numbers. No numbers yet, so we'll see with that one. And yeah, gonna wait for these earnings over here. Let me see what's going on there at CNBC real quick. One sec. All right.
Charge, and that's because lower rates ease the pressure on their funding costs and could help stabilize those.
Yeah, regional banks are up today. Actually, that's a very good sign for the markets. That would actually explain the reason why IWM is up a considerable amount today, over 1.3%. What's KRE? KRE is probably making a new 52. Wow, KRE is up 3.5%. That is very bullish for the markets. What are financials at? Financials are up about 1% today, near all-time highs. XLK shy of all-time highs. XOC, which is mostly Google and Meta. I'm actually surprised. I was actually kind of surprised that Meta was just dumping today toward the end of the day. Or well, not toward the end of the day, but all day for the most part. Yeah, Meta is down like 1%. It's not nearly as down as much as it was before, but it is certainly still down throughout the day. In fact, a lot of the mega caps weren't really doing that well today, with the exception of Amazon. And that's always very good to see. I am a large Amazon shareholder. Microsoft is down about 3% today. I wonder what the news was in that one. Let me get rid of these charts over here. Tesla is almost at all-time highs. Netflix is down 4% today. Man, this is the nastiest chart here for Netflix. Maybe Netflix topped out for now, but I'm pretty surprised that we're sitting over here near all-time highs, and a lot of the mega caps are not really near all-time highs. I mean, obviously you have Apple near all-time highs, you have Google near all-time highs, you have NVIDIA somewhat close to all-time highs, maybe not that close. You have Tesla pretty much near all-time highs, but you have Amazon, Meta, Microsoft, Netflix, nowhere near their all-time highs. So it kind of makes you think, like, what if these stocks come back? Does that mean that we're going to get that rampaging Santa Claus rally bull market? We'll see. We'll see. So just a few other things over here. Did anybody report earnings yet? We got about 1 more minute left. Planet Labs is up about 5% after hours. Let me hide these over here real quick. Let's see if these numbers are out here. 1 second, just trying to clear some stuff. All right, no one's talking about it on CNBC yet. Let's see here. Planet Labs, did they report their numbers yet? No, I don't see anything with the Planet Lab numbers. I don't see anything yet. Let's see here. We have Planet Labs is up 8%. Adobe first move is up 5%. Let's go. Let's go. Let's go. Oracle's its first move is up about 3%. Adobe a little bit reversing those 5% gains over here, but now they're coming back. Planet Labs is still up about 8% now after hours. Synopsys is up 3%. So far, the initial reaction looks pretty good for these earnings. I'm trying to pull up the Planet Labs one real quick. We don't have any coverage yet in CNBC, but I will pull that up as soon as they bring someone on there to talk about those earnings. For now, I'm going to keep this chart open and going to continue to see the movement in these stocks. Oracle actually reversed its gains. Now Oracle is down about 2% and Adobe is up 2.5%. Planet Labs still up about 8%, so that's really good to see. All right, so I got to do something on the side over here real quick. Yo, shout out to Wolf, man. Shout out to freaking Wolf. go ahead and subscribe to the Wolf Financial YouTube channel. Again, starting in 2026, I will only be streaming live on the Wolf channel, no longer on my channel anymore for this specific show. Go ahead and subscribe and like the video on there. And of course, we are here to bring you guys these earnings once again. Wow, Planet Labs is up 12% after hours, 13% after hours. Synopsys up 4%. Adobe is trying to hang on to these gains over here. Oracle just dumped about 5%, reversing all of its gains after hours. I'm going to do something here real quick just to get this out on the Twitter as far as providing that information for a lot of the followers over there. Let me just throw that on there real quick. All right, so let us see what some of these earnings are. I'm curious if these things are going to hold. I do like that. I do like that candle on Adobe. I'm long Adobe here, so I would love to see Adobe make a monster move to the upside over here. Let's see if anyone already posted about Adobe. Okay, so we got Wolf Financial over here. We got $6.19 billion in revenue for Adobe versus the $6.11 billion estimate. Adjusted net income, $2.29 versus, $229 billion versus 226. The EPS came in at 4.45 cents. I don't see this. Oh, they missed. I don't know. Earnings Hub sometimes it might not have the right one, but it does look like here the market does like what it sees for Adobe as it's up about 3% after hours. Let's see what anyone in the chat says. AETF, what is going on? ETF. Who's ETF? Maybe it's the ETF one. All right. So those numbers look pretty good. Let's go ahead and take a look at, see if they posted up here we go. Oracle. All right. So Oracle, $16.1 billion. So they missed the top line by about $900 million. Is that not? Yeah, that's about $900 million. The adjusted EPS is actually a beat. The EPS is a beat, I believe. EPS for Oracle is 150. So they actually beat an EPS. Maybe that was probably like a one-time thing that they did to beat that one. So that would be pretty good to consider them beating that one. Let's see if we have the backlog numbers and let's take a look. Okay, good. That's still green. I want Adobe to stay green. I don't want Adobe to stay red. Let's see if they have the results on here. Do we have any coverage on CNBC? I'm surprised there's no coverage in CNBC for any of the earnings that happened so far. Am I in the latest? Here we go. I'm just going to pull this up real quick.
At $2.26, that is a non-GAAP
Screen.
and slightly below expectations at $16.1 billion, likely due to a weakness in software revenue, which again just came in slightly light. If we look at AI and cloud, the remaining performance obligations, which is the key bookings number, up $523 billion in the second quarter, up 438%. That is a higher growth rate than the previous quarter and above street estimates. Cloud infrastructure seeing gains of 68% year over year, stock down about 5.6%. We have comments here from CTO and Chairman Larry Ellison, how the company is selling Ampere because we no longer, he says, think it is strategic for us to continue designing, manufacturing, and using our own chips in our cloud data centers. He adds that we are now committed to a policy of chip neutrality, where we work closely with all our CPU and GPU suppliers. Of course, we will continue to buy the latest GPUs from NVIDIA, but we need to be prepared and able to deploy whatever chips our customers want to buy. There are going to be a lot of changes, he says, in AI technology. I would perhaps look at shares of NVIDIA to see if they're responding, but some interesting comments here from Ellison. I don't see any specific comments on financing, which of course is a big topic of discussion around Oracle, the funding of its massive data center build out, but I imagine that will be a big topic when the earnings call starts at 5 p.m. Eastern. Analysts asking for more transparency on whether this company will continue to lean into the debt market or use other tools, Morgan and John, like vendor financing, equity, or bringing in a sovereign wealth investor. Again, shares of Oracle now down 6% in overtime.
Okay, Seema Modi, and we know you'll be watching and bringing us those headlines when that call does kick off. Appreciate it. David Zervos, I want to get back to you. There's a lot we just covered right there, but I actually want to bring this back to some of the reporting we just got from Eamon Javers. I mean, it's widely seen that Powell is a lame duck Fed chair at this point, but he still has 3 more meetings where decisions will be made. We did just get that SEP and the dot plot. How does all of this shape up, and how much of this hinges on who the president ultimately picks to be Fed chair?
Oh, wow. Looks
and I
like...
ask that as the U.S. continues to keep cutting here, or at least right now cut and be a little more dovish. But
it looks like Adobe reversed its gains after hours. Just about flat. We will continue to monitor that one. I'm going to leave CNBC playing over here because I got to get to see some posts out here. So stand by, guys. I'll still be here. Shout out to the people in the chat sticking around. Really appreciate you guys. We got 16 people on the Wolf Financial channel. We got 6 people on my channel. Really appreciate you guys being here. Going to go ahead and continue the stream from CNBC while I get some stuff out real quick. Take a look at these numbers and I'll report back to you guys. 1 second.
Shifted their neutral visions up dramatically, over 100 basis points since the pre-COVID level, all without actually changing their neutral growth rate assumptions, which have stayed the same at about 1.8 or 1.9. So we've had this huge shift in the neutral expectation. My personal belief is the folks that are coming in under President Trump, and there will be a number of them, I think, in next year, 2 and possibly a third, depending on what happens in the Lisa Cook trial. And of course, depending on whether Jay leaves, which I believe he will, I think you're going to have a view that neutral is lower. And that'll be the debate. The debate will be how far are we from neutral? And there's going to be a push away from this raising of the neutral interest rate that has happened. And I think that's right. I certainly am at the bottom end of that range and would probably put myself as one of the lowest in neutral rate expectations. But we were at 2% pre-COVID in neutral rates, 2.5%. And I think that number is where we're going to ultimately settle after a lot of debating. But right now, we're still fighting that battle. So I think that's the dovish change that comes in 2026 and ultimately in 2027 as well.
Okay. David Zervos, thank you. With a Fed-induced rally here for the major averages and the dollar coming off and the lower end of the bond curve coming off as well, the yield curve coming off as well.
Meantime, Adobe earnings are out. The stock moving around a bit, slightly lower here, fractionally in overtime. The company reporting earnings of $5.50 a share, beat of 11 cents a share. Revenues of more than $6 billion also topping estimates. First quarter guidance topping the estimate as well. Company says remaining performance obligations, a measure of backlog, stands at more than $22 billion. The CEO, Shantanu Narayan, crediting strong adoption of AI tools.
Well, shares of Oracle moving lower in overtime. That's the market reaction right now. We're going to get an analyst's take on the numbers we just heard, with shares down about 5%. That's coming up next on Overtime.
Oh, hi. Work here.
All right, so we had those earnings come up there.
I've been
I'm
trying
interested to
this
see what
UKG thing.
I'm interested to see what the analysts are going to say about that one. I'm still digging through the numbers over here. Let me actually pull them up real quick. Hold on. Let's see if they post. No, they didn't post the numbers in their website yet, but it's very likely. Actually, let me take a look over here. Fiscal. Oh, actually, I think they did. Yeah, they did. Let me go ahead and share this screen over here. All right, so we got the Adobe Q4 fiscal. That's such like a weird notation for their quarter. I mean, like Q4, we're technically in Q3. They're on the same fiscal year, but they're in a weird quarter range. I don't know. These CFOs always like to go in some random places. Is this the highlights? Okay, so they came in at 11% year-over-year growth in terms of revenue, which is good to see. That's also constant currency the same. I believe that was a slight reacceleration. Let me pull up the fiscal AI just to look at their previous numbers. But last time I checked, I think that is a reacceleration in terms of their revenue. Just a slight reacceleration, but coming in around 11% is still really good to see. I believe the stock is actually down after. Yeah, it's like about flat after hours, which is just, it is what it is. Really nothing you can do there. I think they're going to be waiting for the earnings call to see what the scenario is there. Oh, wow. They already have actually the numbers in fiscal AI. That's cool to see. So they came in. I mean, their revenue is still growing double digits. You can't really complain about that one. If the revenue is growing double digits still for a company that just reported over $6 billion in revenue, I mean, this is when like the long-term chart doesn't really make sense to me. If the revenue is still double-digit growth, right, then why does the stock just continue to go down? Broken stock or broker business? You guys tell me. All right, so let me pull up Adobe. I got the document right there real quick. Okay, so let's see over here. Continued growth. Okay, so monthly active users increased 30% year over year, which means more people are using the product. But I do wonder if that is the subscription product or if that's just like the free trial product that they do offer. Are they converting these people? That's probably more important to see. Man, I don't like these kind of slides over here because like it doesn't give me the exact thing I'm looking for. Also, digital experience, like, no, dude, I want to see. Oh, revenue actually increased 10% year over year, but the digital one is the one I want to see. So digital. All right, so digital media performance grew 11% year over year. Now, the one that I'm looking at, I keep on forgetting the name of that business, digital media. The largest part of the business is digital media and the subscription revenue. So subscription revenue is the one that I want to see, but it looks like last quarter they did not grow as fast as 12%. Maybe that's what the market was looking for. 462 billion, which is still pretty high. I think that's very high actually. Hold on. Let me see what else they got here in the. Oh my goodness, man. This thing is I don't want to go through all that right now. Let's see here. Let's see if they got a good data sheet. Here we go. All right. So ARR data, reporting performance obligations. Cool. All right. Segments. All right. So digital media segment. This came in at $3.3 billion. This is the right quarter? This is not the right quarter. That's how I was like, wait, what is going on here? All right. So digital media segment. Digital media came in at $4.62 billion, which is what I saw before. Last quarter came in at 446. So if we want to do a comparative side to side, 4.15 by 4.62, that's the most important figure that I want to see here, and I want to see that grow. So I would continue to grow, not like just grow, but continue to grow. So $4.62 billion divided by 4.15. That means it grew about 11.3%, which is a slight deceleration from last quarter, but still good. I mean, this is its largest business or largest portion of its business. They have digital experience for subscription. It's all subscription revenue, which is really good to see. Digital experience is almost as big, $1.3 billion, maybe not almost as big, but let's see what number they came out with those. Digital experience came in 152, 1.4. So 152 divided by 1.4. That one grew at 8.5%. So that one decelerated. Interesting. I would expect that one to maintain double digits, but it did not. That's the first single digit print it had on a quarterly basis in ever. Wow. So that seems to be decelerating. But the good part is that that's a much smaller business. That's 1/3 of the business versus the digital revenue subscription. All right. So I guess we're just going to wait and see what happens at the earnings call. The stock is about flat right now. So, it's doing what it's doing. Do they have anything else? Revenue by segment, digital media, 73%. So 75%. So yeah, this is the reason why this is more important, is because this makes up 75% of its revenue versus 24% of revenue for digital experience. Publishing and advertising has always been 1%, a much smaller portion of the business. Costs, supplementary cost of revenue data. So cost is not that bad, but with these SaaS businesses, The more you scale out, your costs stay more under control because scaling out is much easier to scale out to a larger population versus companies where they can't scale out. So it's like whether it's like one-to-one. So if you had like, for example, waiters in a restaurant, right? So if you want to expand in your restaurants, you need to have more waiters, you need to have more staff to be able to accommodate the larger population that's coming into your restaurants. But when it comes to SaaS and software companies, you don't really necessarily need to scale. Like obviously the cost is going to be higher, but not nearly as high or as fast as the revenue is growing for those specific segments. So this is good to see. These costs are somewhat flat here, flat in terms of growth, while the revenue for each segment does grow. That's always good to see, which means that their gross margins will continue to expand. Let's actually take a look at their gross margins if they do post that. This is the difficult part over here, is that I cannot see that data on that sheet unless I run it through ChatGPT. But either way, gross profit margins expanded last quarter from 89.5% to 80. They've actually been expanding for the last year. And I don't know. I guess this is one of those phenomena. Like, why is a stock not up even after expanding margins? We'll see. Let's see their net income margins. EBITDA grew, which is good to see. Did I have the? I can't. I don't know. That'll be too much pull over here. But again, you want to see the cost of sales, which is basically going to help us calculate the gross profit margin. The cost of sales is growing, which is good to see, but it's growing at mid-single digits. It actually contracted for the other 2 quarters before, while the top line is growing at double digits. So that's always good to see. Like the amount of money you're making is increasing faster than the costs, right? Which means that your gross margin is going to go up. And then when you deduct all of this other stuff, you had actually, I totally missed this. Their operating profit was $2.261 billion. And the operating profit grew by mid double digits, which is faster than it was last quarter. And their operating margin actually expanded by 20 basis points. Like this is a company that is not dying. Like certainly we're not sitting over here at 38% operating income margins or EBIT margins, but it's definitely meaningful growth in terms of profitability, right? So let's look at the free cash flow. Free cash flow came in at, actually, let's take a look at the net income since that's already up here, right? So net income accelerated to double-digit growth, right? We got to actually take a closer look here to see if it was like a one-time cost that's actually increasing this, but it looks like this constant trajectory here, it's coming in the right place. Like when you see something like 192% growth, like that means that there must have been like some sort of one-time cost, but then they're able to get back there and have a record quarter in terms of net income, which is good to see. So then that means that their net income was $1.85 billion, and that grew at double digits, which means that they're returning more profit to the company. Share-based compensation expense. Okay, that's up about 10%. So that's something to keep an eye on. But it is a software company, so we'll see. And I mean, it still looks like it's under control, right? So that's good to see. Operating cash flows is still growing at about 8%, which is good to see. Free cash flow is one I want to look at. Free cash flow accelerated, grew 8.8% year over year. So for the company how much did the company earn last quarter? Total revenue is 4.66, right? If revenue is 4.66, and free cash flow was 3,126 divided by 4,166. I think that it was 4,166, right? 466. My apologies. That actually would that would have been quite different. Actually, no, I'm looking at the wrong quarter. 619. 6.19. I divided by the wrong number. So 3.13 divided by 6.19. They have 50% free cash flow margins. Can someone in the audience really double check that number for me? That's absurd. 51% free cash flow margins. Free cash flow is 3,166. Let's take a look at this sheet over here. Do they provide that? Come on, Mr. CFO. And they're buying back more shares still. Keeping shares at 406. No, sorry. They were buying 400. They bought back. They bought back 7 million shares in just the last quarter alone. 7 million shares. So the company's cheaper today than it was yesterday or than it was a couple of hours ago. The company's cheaper. GAAP operating margin is 36.5%. That, like I just showed you, that accelerated by 20 basis points. Stock-based compensation grew by 8.1% versus the previous quarter, 8.7%. Doesn't make sense to me. Non-GAAP operating margin. Okay, I don't really care about that stuff. I like the GAAP one, not the non-GAAP one. Diluted earnings per share, 550, which is good to see. Where's free cash flow? Do they have free cash flow? No, they don't list that over here. Let me see here. This stock should be up like 5% after hours. I don't know. Whatever. Market does what it does. They'll hand me over that curveball. We'll see what happens. The stock is green again. Thank goodness. It deserves to be green. The stock does not deserve to be down. It deserves to be green. Yeah. So 16 people on the Wolf channel. Appreciate you guys for joining in. For the other 3 people that are on my channel, anyone who is on Twitter, please go to the Wolf channel on YouTube. Subscribe to Wolf_Financial. I'm going to be, of course, reporting there. You can interact with me live via the chat. Ask me any questions you want, guys. Ask me any questions you want. I will answer them. Very long Adobe coming into earnings. I do like this earnings report. I'm probably going to dig a bit more into it. I don't want to waste everyone's time. I do want to get into the next segment here. But before I do, I just wanted to pull up anything with Oracle. And I want to see if there's actually any coverage here in terms of Adobe. They said that they're going to do it. Synopsys CEO is actually on there. Synopsys is an important stock when it comes to, hold on. Did anyone talk about Adobe? Who are these people sometimes? Let me just share that screen.
Have a higher degree of dependence on NVIDIA.
In China, when it comes to
It's good news. And if these China was US in South
All right, dude. I don't really care about that. Let's see here.
Being a big, very definitive answer.
No one talked about Adobe?
This. And I think this is going to be
actually, I think they were talking about Adobe. So let's go over
your initial takeaway on what we got from this earnings report.
Yeah, absolutely. Thanks so much for having me. Always a pleasure to be here. Look, I think it was a pretty inline quarter. They obviously telegraphed a lot at the analyst day, which wasn't that long ago, although it feels in AI lifetime, ages ago. But the RPO was very much in line with what they had kind of pre-announced. Numbers were relatively in line, slightly missed on the top line. But overall, I would say, in line with what people expected, but we don't have answers to the big question, which is how are we going to pay for all of this build out? How are we going to pay to meet those RPO demands? What's the certainty around this? And I think this is going to be a very eventful earnings call in about 40 minutes as we get more color into those questions. What does a timeline look like? Anything like that? And I think that's why you have the stock down a few points. But realistically, I mean, the implied volatility heading into the quarter is a lot more than that. And maybe the earnings call will change that.
I mean, that focus on potential financing alternatives and what paying for all of this looks like. I mean, is that ultimately what's driving the stock, at least here in the near term?
I think that's exactly right. I mean, all the enthusiasm around the large deals, including with OpenAI and everything like that, that's all there, right? And that's all embedded in the stock. Now the question is, okay, well, how do they get this out there? What can they do beyond debt? Are they willing to lose their investment credit grade rating? Are they going to dilute shareholders? Are they going to, look at alternative financing, look at maybe sovereign wealth funds? I think there's a lot of options on the table, and I don't know that they're going to give a very definitive answer, but I think they can do a lot on the earnings call in that hour to really calm fears that there's not going to be a huge delay in the recognition here, that the margins on this deal and on similar AI deals are in fact something that's going to be accretive to profitability over, call it, the next 5 years.
Rishi, I guess we knew that Oracle was offloading Ampere to SoftBank, and the idea behind Ampere was chips sort of designed specifically for AI. This is a departure from what we see the big hyperscalers doing, who I know Oracle would like to be held in the camp of, at a time when there are already questions about what kind of margins Oracle is going to be able to get out of its data center strategy long term. How are you modeling what they're going to be able to do, especially given how successful their hardware strategy was in another era when it raised eyebrows?
Yeah, look, I think it's a great question and one that we need to ask, because as you correctly pointed out, all the other hyperscalers, Amazon, Microsoft, Google, are all just designing their own AI chips and using third-party vendors alongside that. And I think the rationale there is to reduce dependency on NVIDIA over time. And, obviously that can have near-term implications, but over the long term, no one wants to be all in on AI infrastructure and only have one supplier behind that. Oracle, I think they recognize that all the fortunes here are very much dependent on them being a big vendor or middleman of choice around these NVIDIA chips, their close partnership with NVIDIA and with Jensen. And I think that's why, right, is just kind of calming those fears that Oracle would design something competitive with NVIDIA. And I think that's why they're doing that. So not surprised to see that, just given I think Oracle does have a higher degree of dependence on NVIDIA than others.
Okay. Risha Jaluria, thank you.
Thank you.
Well, Synopsys also reporting results. The stock rising here in overtime. We're about to talk to the company's CEO.
All right, so that's about it for Oracle. I mean, it is going to come down to the earnings call. Are they going to give the guidance that the market's looking for? Because they always announce guidance during the earnings call. I'm not going to be streaming the earnings call. However, I kind of want to stream the Adobe earnings call, but I'm not sure I'll be able to, guys, unfortunately. But I'm going to be listening to the Adobe earnings call. That one I'm more concerned about. I think there's going to be tons of coverage online for the Oracle earnings call, so I don't really need to listen to that right now. I have no position in Oracle. In fact, someone asked me earlier because someone made a lot of money when I said that Oracle was going to go up in the last earnings, and it did. It went up like 30%. And I mean, that was just a guess. Like, I don't know what's going to happen during these earnings. And then the same person asked me what's going to happen this earnings, because my guess is he was going to probably put on an options bet if it did. And I told him, like, I wouldn't play this earnings if I would not play these earnings, right? It might go up and down, but it'll do whatever. And it looks like it looks like it's down. It's down 6.35%. We don't actually know if this is going to hold after the call, because during the call, some crazy stuff might be mentioned. It could be up 5%, could be down another 10%. Who knows? All I know is that Adobe is about flat coming into earnings. Looking at bull flag setup, and I am just, I don't know. If I'm looking at the Adobe earnings, I see that I believe they missed guidance or reduced guidance, right? And the market's going to hate it if that ever happens. As a matter of fact, let me just bring this up over here real quick, and then I'm going to do a little bit of a recap on the FOMC and my thoughts on it real quick. Oh, not real quick, but after it. But I do want to see what the guidance was. Did I spell guidance right? 2026. We anticipate transaction to close. Oh, they must have acquired someone. My goodness. They do not make it easy to look over here. All right. So it's probably on the press release. Okay, targets. So for the full year 2026, now let's look at last quarters, because it's always good to compare to last quarters in terms of guide to see if they raised it or not. So last quarter, they did not provide 2026 guidance. Last quarter, they provided 2025 guidance. All right. So 2025 guidance for last quarter was 2365, 2370. So about 2370. And then they increased it 2590 to 2610. So they said they raised guidance for the year, which, wait a minute, hold on a second. They just reported the entire year. All right, hold on. So what did this year come out to? Actually, I'm going to look at it over here. They'll provide that over here, not there. Investors data sheet. For the year, they came in at 2377. So last quarter, they said, so they beat their estimates. They beat what they guided for. Last quarter, they did not provide fiscal year 2026 guidance. They provided it for this quarter. So next quarter, they expect to have 625, 6.3, which means that, let's say they hit the upper end because they usually beat their earnings. 6.30 divided by, I'm trying to calculate the quarterly, the year-over-year growth for the quarter here for Adobe. And where's my sheet here? Okay, so they're going to be reporting for this quarter. So it was, nope, that's net income. 5714. 57.714. So they're going to be growing next quarter at 10.2%. That's what they're guiding for, which is basically where they're growing at right now. I mean, they're still growing 10% for a $24 billion run rate company that is $143 billion. So right now, the price to sales, this is the part that just doesn't make sense to me. It's trading at a 5 times price to sales with a free cash flow margins of 50%, operating margins is about 36.5%. Buying back stock, I don't know. This just does not make sense to me. This stock should really be up like 5-6% right now. It should have held on to those gains. Why it didn't, I don't know. But I mean, we're in shares right now, so it's not really a big deal. IWM is up 22 basis points after. Holy cow, Planet Labs is up 20.5%. What in the world? I'm going to post this baby right here. Actually, you guys are seeing it in action, seeing it live in action of a post that I'm about to do right now. I want to post this one real quick. All right, so I don't know. I don't know why the stock's not up. We'll wait and see what happens with the earnings call. I will not be on the earnings call live, unfortunately, like I mentioned earlier, but I do appreciate all 16 of you guys on the Wolf channel and 4 people on my channel attending this stream. I don't know. We'll see. So let's recap on the FOMC, okay? Because we obviously had a very interesting day in terms of the Federal Reserve reporting that they're going to reduce rates by about 25 basis points. And this is what I want to take a look at over here. And I'm going to explain why this is pretty important. So they basically said that the committee judges that the reserve balances have declined to ample levels and will initiate purchases of a shorter term Treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. So they didn't say it here. They didn't say it's $44 billion here, but I believe that someone found it somewhere else, that they are going to be starting quantitative easing on December 12, purchasing $40 billion of short-term Treasury securities on December 12 on a monthly basis, very, very likely on a monthly basis. So we haven't had quantitative easing since 2021, right? Where they basically ended it. At the time, I think it was like $60 billion in mortgage-backed securities and $60 billion in treasuries. So they're like really jump-starting that. So they're obviously trying to get the rates to come down lower, which means that they're going to be the buyer last resort. My guess is they have to do this because we have the government shutdown vote coming again in January. And in order to raise that debt ceiling, the Treasury is going to have to refill its TGA or Treasury General Ledger account, which means that they're going to have to issue a lot of treasuries into the market. And it's very likely that Scott Bessent is going to do it in terms of short-term treasury rates because they're much lower than the long-term, which is what Janet Yellen was doing. Actually, no, Janet Yellen was doing it with the short-term rates, but they went up like 3-4% in a matter of less than 2 years. Scott Bessent's going to start issuing treasuries at the open market, and the Fed's going to be there to buy it. I think that's the reason why they're doing this. That's the reason why they started quantitative easing, and that's the reason why they're starting at $40 billion, which is a very fast amount. You'd expect $20 billion to start out with, but they're turning the money printer on. Guys, this is the equivalent of the money printer being turned on. The thing is that, is this really good or is this really bad, right? Like the Fed is only cutting rates 25 basis points today. They're anticipating the summary of economic projections, actually, summary of economic projections here. Yeah, this is from today. So let's look at the dot plot. The dot plot says here that by the end of next year, by the end of next year, oh, this is a mess over here. We don't even know what we're going to be at. But according to the end of 2027, everyone is really leaning at about 3 to 3.25% which is just 2 more rate cuts from me, because right now we're at 350 to 375 in terms of the Fed funds rates. And they're expecting in the next 2 years to be just 2 cuts lower and then just stay there, right? Yeah, we're just so the terminal rate is 3%, not 2%, 3%. I think the Fed expects inflation to run a little bit hot for quite some time. In fact, Powell did say that in the meeting today. I was not listening to the meeting, but they did say that in the meeting today. They expect unemployment to come back down about 4.2%, which is good because right now it's at 4.5, so it's probably going to come down. They expect GDP to reaccelerate next year to 2.3%. They expect core PCE to be at 3% and then come down to 2%. So yeah, they do expect inflation to stick around for a minute. And that's probably the reason why they're not cutting rates any further, because they don't want to cause more inflation and possibly run into a scenario where they can no longer cut rates. They want to keep it 3%. The thing is, I mean, you're injecting liquidity into the system if you're adding $40 billion of liquidity into the system to buy these treasuries. So they're buying treasuries from the open market, means that they're taking treasuries off the open market and they're increasing their balance sheet, right? So I don't know, man. I got to tell you, the market definitely liked it, because that's the reason why you saw the market basically close near all-time highs. Certainly was not as bullish toward the end of the day, because the SPY was trading at about 690 at the end of the day and then pulled back to 687. But I mean, hey, it's only one day, so it's like whatever. However, we're sitting at all-time highs on the SPY. We're not sitting at all-time highs in the S&P 500, which is quite a bit different. But we do want to see that continued momentum to the upside if we want to stay in this bull market. Let's see, actually. Wow, Oracle is down about 7% after hours. Nebius is down in the 92s again. NVIDIA is down 1% after hours. Oh, wow, that sucks. NVIDIA is down 1% after hours. But everything else is holding up quite a good amount, so it's not bad to see. The Qs are only down about 2 basis points. We got to wait and see what happens to that Oracle call. I really hope Larry Ellison doesn't dump on the market. Like, I feel like that would be a very bad idea if he did do that one. I posted earlier. Yeah, I don't think we got that backlog number, did we? Where's Oracle at? Did anyone get the backlog number for Oracle? Oracle cloud revenue, $8 billion. Oracle. Oh, wow. $523 billion. I don't know. The market doesn't believe them. The market does not believe them. This is why it's like kind of a loose situation, because if that RPO came in lower, then the market would not like that. And the fact that they came in higher is like, the market, I don't believe you. The market just said, I don't believe you. I don't know, guys. We'll see what happens with that one. I mean, there are some crazy moves in the stock market today. I already pointed out Photronics closed the day up about 46%. That's a crazy stock. Shout out to Stock Talk. Oh, wow. This guy bought calls on Planet Labs coming into the end of the day. That's wild, guys. Congratulations. That thing is up 20%. I hope they're in the money calls and not too far to the money if they were out of the money. Because if they're in the money calls, they're going to be up a lot tomorrow. You're definitely going to be up a lot tomorrow. We need to see what's going to happen at that Oracle call. Now I'm like starting to think, should I listen to the Adobe? The Adobe call doesn't really matter too much to me right now. So I could Oracle one. It's going to be interesting listening to the Oracle call in real time and seeing the stock move, because Larry Ellison is probably going to say a lot of stuff in there to try to prop the stock back up after hours. Now it's down 7.5%, almost making its way into the $200 sub $200 range, which won't be good for shareholders at that point. But I mean, the stock market's still bullish, right? The stock market's still bullish. We're sitting at all-time highs. We bounce off the 9 exponential moving average. I mean, there really is nothing to say here when it comes to that stuff, you know. So we got to go ahead and wait and see. Photronics reported earnings this morning, and they're up about 45%. And let's look at see if someone posted some numbers here on Photronics. Yeah, kudos to Stock Talk. That's wild. Did anyone have the earnings for Photronics? Photronics came in at $215 million. Estimate was $205 million, but their EPS beat by about 30%. Like, that is a wild move. All right, so here we go. So net income, $136 million, EPS $2.28. Good to see. Good to see. Revenue. Oh no, that's for the whole year. It's for the whole year. Let's see here. All right. Where's my fiscal AI? I don't know. I mean, you can't really trust it. Because well, I mean, you could kind of trust. I trust more of the PCE because that's the one they look at. And when it comes to the jobs, I trust more of the ADBE private payrolls because the unemployment is more of a survey, so it doesn't really give you the full picture. All right, Photronics. See, this is why you don't need to be in like high growth companies to make some money here because they did contract revenue by 3%, but the idea is not revenue contraction. I mean, look at these gross margins, jumps up by 5%. That's pretty insane. Their guide was probably, oh no, that's not their, okay, jumped up by 2%. I mean, really the story here is going to be the guide. And I imagine their guide was actually very good. Let's see if it's on Earnings Hub here for PLAB. Doesn't say their guidance over here. Let's see here. I got the AI summary. PLAB IR. Let's take a look at this presentation. Another company that does a Q4 fiscal year 2025 and a quarter ahead. I don't get it. Oh, that's so funny. They put their market cap down just to show how ridiculously cheap their stock is. This is like a company that's just wild to me. This is another one of those situations where it's like this company is just insanely cheap, right? Coming into earnings, they were a $1.5 billion company. They just reported revenue at nearly $1 billion. They were basically trading at near 1 times price to sales, and they're still pretty cheap. If you really think about it, the stock is definitely not as cheap as it was yesterday, but now it's a $2.2 billion company that is trading at a 2 times price of sales. Now, the significance with photo masking when it comes to semiconductors is that you have your wafer, and basically you have this large beam of light, these laser beams that get projected onto the wafers themselves, and they go through this photo mask that's over here. And these photo masks are not like 4x4 that you see here. They're like millions and millions in like one wafer, like more than that, like some obscene amount. And they have to be very accurate. Because if it's not, the chip isn't going to work. The computer's going to be like, oh, what's going on here? This isn't working. So this is how critical these components are. But the thesis with this is that they are the largest and only photo masking company in the US. This is the same thesis for ON Semiconductor, and this is the same thesis for Amkor. I'm not taking credit for this one, but I did do the research on it before I bought, and it seemed like it was a great deal. Obviously, the stock option placement, great call from Stock Talk. I mean, 100% credit to him, actually. But this is the thesis for a lot of the companies that I'm investing in today, is that this onshoring thesis is working. It's working in the stock market. It's working with Amkor. It's working with ENS. It's working with Centrus Energy. It's working with Photronics, and it's working with ON Semiconductor, because honestly, ON Semiconductor is the only U.S. power chip company at its profitability level that's expanding more and is eligible for the CHIPS Act, and also one of the beneficiaries of a lot of the onshoring that's happening with the semiconductor establishments in the U.S. Photronics is in the same situation. It's also a benefit of this one because they're landing themselves with clients from major mega cap companies and also taking hold of building more production in the US. They have their HQ that's in Brookfield, Connecticut. They have US capacity increases in Allen, Texas. They have Boise, Idaho, in addition with the all right, I'm not going to continue to repeat whatever's on this sheet, but there's a reason why the stock is up 40%. And it's not because they reported good earnings, and it's not because the revenue is expanding, because it clearly was not this quarter. It is the idea that, look, their margins are going to expand and the revenue trajectory is going to keep increasing as more business comes into the US, as TSM starts to scale up their production in the US, as Apple starts to scale their production to the US, as all these companies start to scale up their production in the US. Photronics, Amkor, On Semiconductor are going to be big beneficiaries of that market coming in. So they probably had a sheet in here. Look at that. They have 1/4 of its market cap in cash. They have no debt. Operating cash flow is at $68 million. CapEx is lower than operating cash flow, so they can definitely fund it. CapEx is at $330 million for the entire year. Not bad to see. Do they have their guidance? I don't think they had their guidance. I didn't listen to the earnings call yet, so I'm not sure if their guidance is on here. Their gross margins expanded from 4% by 4%. Operating margins expanded by 3%. That's just what the market loves to see. When your margins expand, the market just loves to see that. Do they have guidance? Oh, here we go. Fiscal year 20. So operating margin is expected to be at 23.25, which is about where it is this quarter. Revenue is expected to be at 217, 225. I don't think this is really a big deal when it comes to the revenue trajectory here. Yeah, that would mean that they actually accelerate growth to be somewhat flat. Actually, no, that means that they're going to be growing, accelerating next quarter. 217 to 225. Yeah, that's a slight acceleration. So this is actually, next quarter is going to be its first accelerating quarter in terms of revenue growth since January 2024. Where was PLAB trading in January 2024? Well, there you go. It was trading just about where it is today, probably a little bit lower, but that's this coming down is the decelerating growth that you see in the fundamentals that's projecting itself into the stock. Yes, we contracted this quarter, but this is the last quarter they were contracted, and they also expanded margins quarter. This is the reason why the stock is up 43%, not 45%, not because of the fact that they expanded margins, not because of the fact that the revenue is going to accelerate next quarter, because everyone, when I say everyone, I mean most of the stock market, assumed that it was going to be a bad quarter and the company was going to be dying, which is the reason why I was on a massive downtrend. And then you have earnings and the market's like, hold on a second, we're positioned incorrectly for this stock. We need to buy, right? So whenever that happens, that's when the stock comes back. So that's very good to see. Congratulations to everyone that is in this stock. Congratulations to Stock Talk. For me, I actually executed some of my in the money call options after today, and I took some profits on part of it. So I'm sitting on a mountain of profits, and I actually took a lot of those profits and I bought Adobe stock today, including some January 2026 call options on Adobe, the 400 strike. But the call options are a very small percentage portfolio when it comes to Adobe. So, if it doesn't go up, it doesn't go up. I still got a month left if it's flat, and we still yet to see the earnings call and how the market reacts. But the shares are pretty much where I bought them. Actually, I think I'm up about $2 in each share, and it's about 3 to 4% of my portfolio right now. So things are flying high, guys. Things are flying high. And I think that about concludes it for this stream. Going to be on again tomorrow, of course, guys. Let's see what we're going to stream tomorrow. Is there anything special happening here? Because if we're not going to stream any earnings tomorrow, Broadcom and Costco tomorrow. Okay, I'm probably going to stream the earnings again tomorrow, guys. Really appreciate you. What are my thoughts on Bloom Energy? I don't know. I haven't really looked too much into that one. What's the chart looking like? Oh, it's definitely a winner. I think Bloom Energy actually is based in the US, right? Bloom Energy HQ. Yeah, they're based in San Jose, California. Could be another one. Could be another winner from all this. The stock is definitely telling you. But the stock has come up a lot since it was sub $20 before a year ago. Actually, no, that was just last August. So, it made a big move. I don't want to chase these moves after they happen. But we'll see, guys. We'll see. Yeah, Oracle is sitting here about 7% down. Adobe is about flat coming into the earnings call. I mean, the market's just chilling right now. The market is just chilling. Nvidia is down 1%. I don't know, guys. We'll see. We'll see how this. I think a lot of it really depends on the Oracle call. So go ahead and tune into that one. I'm pretty sure Amit is streaming live right now, so you can go ahead and jump in his channel if you'd like to. Appreciate you guys being here. Again, for anyone that is on the Twitter or on my channel, go ahead and subscribe to the Wolf Financial YouTube, which is over there below. Catch you guys tomorrow for the